So just to give you a quick background, like 2 minutes. Remember where management accounting, where cost accounting fit in. Remember, MAC has two parts. It has financial management and it has cost accounting or management accounting. Now, in this world, management accounting, financial, in math, as we call it, management accounting and finance, there are 4 broad decisions. Okay, there's other things as well, but broadly speaking, there are 4 decisions. You have the financing decision, you have the investing decision, you have the operating decision, and then you have the distribution decision. The financing decision is all about how do we obtain finance? Okay, so how do we obtain finance? Where do we obtain finance? Which finance should we obtain? Then the investing decision is all about, once we get the finance, where are we going to invest the finance in? Okay, so which projects? So there will be long-term investment decisions and will also be short-term investment decisions. The long-term investment decision was like capital budgeting. Short-term investment decision is basically your working capital. Now you have finance and you use the finance to make investments. Those investments will ultimately decide what happens in the operating decision. So you use the investments to generate income. In order to generate income, you have to incur expenses. So the operating decision is all about profitability. Okay, so to manage profitability, to increase profitability. Now remember, profits is simply income or sales minus expenses. So to increase profit, you want to maximize revenue and you want to manage your costs nicely. Remember, you can't keep cost to a zero. Without incurring costs, you won't be able to generate revenue. But you also don't want to just splurge on different costs. Now, in management accounting, we will say profits equals sales minus costs. Now, costs can be broken up into 2 parts. Sales minus variable costs minus fixed costs. So as you can see, the financing decision and the investing decision, that falls part of financial management. When we come to the operating decision, we fall into the domain of management accounting, all about managing profits, so basically managing profits, trying to increase profits. How can you increase profits? Is by working on managing revenue and costs. And in management accounting, we break costs into 2 parts, variable and fixed. Then for sales and for variable costs, we break it down further. We break it down between units and cost per unit. So revenue in management accounting is a number of units sold multiplied by selling price per unit. In variable costs, it is variable cost is based on units sold multiplied by cost per unit. And similarly with fixed costs, obviously is fixed cost, meaning it does not change relative to output. Okay, so just take note of all of that. So what's important, you must understand the whole basis of management accounting, which is basically managing profits. And there's different ways we're going to manage profits. That is why when you talk about the costing systems, it is about how do you deal with cost? Do you expense it immediately, or do you add it as part of the cost of inventory? By expensing immediately or adding it as cost of inventory has an impact on the profit for the given year. So the costing systems are important. Then you deal with how do you allocate costs. To allocate costs, whether you use traditional costing system, whether you use ABC, the way you allocate fixed costs, will also have an impact on profitability, because if fixed cost is not allocated accurately, you could be either overcharging or undercharging. If you're undercharging, it's going to affect your profitability. If you overcharge and some other competitor finds out, they can steal your market share by reducing prices. So ultimately all affect profitability. Then you went to joint cost, process cost, job costing. All of those affect the costing of a product. What gets added to the product, what gets expensed immediately, all impacting costs, which ultimately impacts profit. Then we will come there to standard costing and so forth. And what we're dealing with in test 3 is activity-based costing, traditional costing, and then your costing systems. And very important, it is your CVP, cost, volume, profit. Now, CVP is critical because it's basically all about analyzing costs, analyzing volumes, and analyzing profitability. So just be aware of that. This is a critical thing. So why I'm mentioning this now is when we go into the question, the way they pose the question is very different to what you are used to. Yet what they are testing is the same thing you've been covering since you have done management accounting, which you do in second year. So so second year, third year, and now this. So it's the same thing they're testing. How it's presented, very, very different. Okay, so just be aware. Keep your mind. How do you deal with costs? So remember, you can deal on a total level, or you can deal on a per unit level. So just be aware of that. Okay, so now we're going to switch into the scenario. And when we do this, as we read through the scenario, we'll bring certain points across, and then we will tackle the actual required. Okay, so we're dealing with none of this question. We're dealing with MAC4862 2020. Okay, quite a different paper, but still something you have covered before. Okay, so they say Madonna retired 2 years ago, and used his retirement benefit package to purchase 3 new vehicles. This included three Hyundai 12-seater minibuses, each costing 690,000 Rand and expected to have a 300,000 kilometer useful life. Okay. Madonna used the vehicles to start a business of transporting school kids to and from school, and relies on profits generated to cover his monthly personal living expenditure. A consultant advised Madonna that the business venture must generate profit before tax of 18,000 Rand per month to enable a business cash withdrawal enough to cover his monthly needs. Okay. The school transporting business operates 10 months in any given year and assumes an average of 20 schooling days per month. Okay, so 10 months, 20 schooling days per month. What's also important in that first paragraph, you understand that he has 3 vehicles, each costing 690. Each with a useful life of 300,000 kilometers, and that in order for and his business venture need to be able to generate profit before tax of 18,000 Rand per month. So they say he needs 18,000 Rand per month in order to enable him to withdraw cash to cover his monthly needs. Okay. So just keep your head straight. It's always good to highlight numbers. The market is very competitive, and Madonna ensured the drivers are adequately trained, maintaining a high standard of safety and customer service. The budgeted annual profit before tax is 513,000 Rand for the overall business. Okay, so just take note of some of those information. So you can see he has a a budgeted profit before a profit before tax target. So basically as a target profit of 513. Remember, they're using profit before tax because they know we are accountants. So we would want to know whether it's profit before tax or after tax. But in most cases for management accounting, probably 90% of the time, we don't deal with tax. Okay, so it's all numbers are generally going to be before tax. Okay, so that's management accounting, not necessarily financial management. So Madonna has 66 school kids in total situated in various areas, but all within 10-kilometer radius of the schools. The service entails morning collection from home to drop off at school and afternoon collection from school to drop off at home, which can vary. See options below. Okay, so option 1, home to school, school to home, that's afternoon. And then option 2, home to school, school to activity, activity to home. Okay, so that's option 2. And then option 3, home to school and school to home. What's the difference? Home to school and school to home. What's the difference between option 1 and option 3? Do you see a difference? Home to school and school to home. Oh, one is late afternoon. Oh, okay, one is afternoon and the other one is late afternoon. Okay, cool. So there's the 3 options. Okay. Clients are charged a flat rate of 2,000 Rand per school kid per month, irrespective of the option chosen. Okay, that's quite weird, but I guess he's keeping his life easy. The price charge is consistent with the average market price for this type of service, with a maximum rate of 2,500 Rand per school kid per month that the competition is charging. Parents can only change an option at the end of the month to take effect beginning of the next month. Okay, so just important information. You can see as 3 options, but each option brings you the same money. Okay, so it's probably not too bothered about the different options. So here you can already make numbers in your head. Clients are charged 2,000 Rand per school kid per month. We know there are 66 school kids, and we know that it is 2,000 Rand per school kid per month. So 66 times 2,000 gives you whatever amount. 2,000 times 10 will give you whatever revenue it is. So 2,000 times 66 give you 132 times 10, which will give you 1.3 million Rand. Okay, so now you know what you can generate. Then they're telling you that the rate is consistent with the average market price with a maximum rate of 2,500 Rand per kid from another competitor. So just be aware, okay? So it's important to have a look at this. Why this is important, remember, you are dealing with CVP, okay? So remember I told you in the CVP class that the whole point of CVP is to help you to analyze a business. In some instances, like a big question where they don't directly ask you for CVP, but they expect you to use principles of CVP. Why I'm telling you this, most of you are CTA 2 students. It might not come through in this exam, but the chance of it coming through in the ITC exam is high. So Psycho like asking a question of this nature. Dear student, please analyze the profitability of the company. Now, they're not talking from a financial management point of view. They're not talking about ratios. Okay, they're talking about a management accounting point of view where you go through the trial balance and you must analyze the profitability. The company may be in a loss position. So they may give you a company, they'll give you an income statement, and they'll give you all the line items, revenue and all the line items with a loss, and they'll give you some notes, and then you need to analyze it and then provide some commentary. So if a company is making a loss, the question is, how can you help them? How can you provide them with advice or suggestions in order to help them become profitable? Now remember, how do we calculate profit? Profit is revenue minus costs. So there's two things we can focus on: increasing revenue and managing costs. Now, we know cost has two parts. Costs have variable and fixed. So under variable, you can manage variable costs, but variable cost is obviously relative to units, right? To sales. Fixed costs, it depends. What is your length of time? Because fixed costs can't necessarily be changed now, but it can be changed over a long term. So, for example, with COVID happening, many companies went into a loss-making position. Why? Because there was no revenue, right? So, how can they manage costs? Well, one of the big costs that is visible to you is basically there'll be three. Number one, if you're a manufacturer, it would be cost of sales. Okay, so how can you manage cost of sales? Number two, but remember, with no sales, cost of sales will obviously drop. Okay, the next big cost, and this is big for non-manufacturer as well as for manufacturer, and that is staff costs, right? Salaries. So that's the next big cost. That is why when there's a bad, when the economy goes bad, they lay off people, because that's the only way to really make a dent in reducing costs. To cut out coffee, to cut out printing, to cut out team buildings, that's going to save some money, but that's pocket change. It's not going to make a dent in the cost structure. So in order to make a dent to really reduce costs, companies cut staff costs, but that's the big one. Okay, but basically look at costs and so forth. But on the other side, you can look at how can you increase revenue. Now remember, there's two ways to increase revenue: volume and price. Now in many cases, the price can't be impacted, because if you increase price, you'll effectively be reducing your revenue even more if you're in a competitive environment. Because when you're in a competitive environment, you are basically a price taker. So if you increase your price, customers will just go elsewhere. So generally, you will work on volumes. But in this case specifically, you may want to increase your price. So you need to make sure, if you increase your price, would the increased price that you're suggesting exceed that maximum price? Now remember, you're already on the average price. By you increasing, you will have to know, are your other competitors also increasing? But if you are increasing while they stick with you, if you were on the same price like the others. So that's one aspect. The other aspect, if you increase and you increase more than the maximum, that will have an impact on your, So that is why you must keep your head straight. You need to think about it. So when you suggest that a company must increase their price by, let's say we tell them increase his price by 700 Rand. What does that make him? Go from 2,000 to 2,700. Do you see now his price is going to be higher than the competitor? Yes, in theory, 2,700 times 66 kids will increase his revenue. But the question is he still going to have 66 kids? You understand? So that is what CVP is all about. So although they just, by the way, talking about a 2.5 maximum competitor, just be aware it can impact on what you suggest. Well, I don't know what the question is asking, but what you suggest. Okay, so just be aware of that. So make sure when you think about management accounting, when you think about CVP, there are those general formulas we spoke about, but ultimately think about profitability. And how do you calculate profitability? Sales minus costs, but you break it down further. So profit equals sales minus costs. Then you go further. Profit equals sales minus variable costs minus fixed costs, because variable and fixed makes up costs. Then you break up further. Profit equals selling price per unit times units sold minus variable cost per unit times units produced or units sold minus fixed costs. So make sure you can see your formula in that different levels, so you can think about when you provide commentary. Okay, so just be aware of that. Let's say Madonna has identified 3 female drivers who have met the requirements, who are paid a monthly salary of 8,000 Rand per person per month for the duration of the contract. Each driver has signed a 12 months contract with Madonna. The drivers will each be allowed 2 groups of clients, taking 100% vehicle capacity in the morning and in the afternoon. The kids are all provided with an afternoon snack pack consisting of 1 still water and 1 fruit daily during the afternoon drive back home. The cost of each snack pack is 5 Rand per school kid per day. Okay, so you might just keep that in mind. So take note, we make revenue for 10 months, okay? But we're paying salaries for 12 months. So just be aware of that. They say the policy, and now remember this, the cost of each snack is 5 Rand per kid per day. There are 66 children, and there are 20 days in there's 20 school days in the month. So remember, you're not going to say 5 Rand times 30 days. You're going to say 5 Rand times 20 days to get a monthly amount. The policy in place states the following: all learners should be strapped in with safety belts and no overloading is allowed. All vehicles must be parked at a designated location during the hours not in use. Madonna will pay for all monthly operating costs of the 3 vehicles, including fuel, tire replacement, service and maintenance costs, including insurance. Drivers will fill in the kilometer readings every time they collect and drop off the vehicle at the designated location. Okay, so the following information was sourced on the vehicle use. Forecast vehicle operating cost in year 1. So fuel costs, average annual distance to be traveled per vehicle, 60,000 kilometers. Average number of liters of diesel to be used for every 100 kilometers is 10 liters. And the cost per liter is 12.50. Okay, that can't be hard, right? So that will be quick to work out fuel costs for the month or the year or whatever. Tires, cost of replacing all 4 tires per vehicle after every 30,000 kilometers. It is 7,500. Insurance cost, average annual insurance premium per vehicle is 24,000 Rand. So given the way information is presented, it's probably we'll see what they want, but it's probably best to work on an annual basis and then convert from an annual basis to whatever they would be looking for. Okay, it is estimated that the cost of serving each vehicle, it is estimated the cost of servicing each vehicle in the first year of operation would amount to 5,700 Rand per service, on the assumption that each vehicle needs to be serviced after every 20,000 kilometers traveled. Madonna has entered into an agreement with 2 high school teenagers to wash the vehicle upon returning every night during the week at a monthly fee of 2,000 Rand per teenager. So let's see how much that per day. 2,000 Rand divided by 20 days, 100 Rand per wash. Okay. Couldn't take it to what you call it. Okay. The arrangement is only applicable during the schooling days, and the 2 teenagers are willing to each do a maximum of 2 vehicles at the agreed fee. Vehicle cleaning materials, water and electricity relating to cleaning of the 3 vehicles is budgeted at 900 Rand per month, which will be paid by Madonna. Current admin and bookkeeping is done by Madonna's wife, a former teacher, at a charge of 3,570 per month. The service is only provided during the 10 months of operation of the year. Okay, so that we'll just keep track. So you can see some stuff is given monthly, some stuff is given annually, some stuff is run for 10 months, some stuff run for 12 months. So to get a general base, it is probably best just to work on a 12-month basis, on an annual basis. So you work on an annual, so get an annual figure, and then you convert to they would be looking for, whether it's a monthly figure or so forth. Okay, so that's just take note. I'm not going to read the potential use of social media. So yeah, okay, maybe we can just read it. There's only a few lines. So one of the drivers who is very active on social media has tried to convince Madonna of the benefits of using social media to grow his business. She had a meeting with Madonna and proposed that he needs to invest in the development and running of a mobile app for his business venture. Parents will be able to download the app on their phones and book rides on the app. Okay, well, not too bad. Okay, so that is that. I just want to give you something. When it comes to management accounting, especially, right? So management accounting and auditing, but for our purposes, management accounting, it's very important for you to make sense of what they want to test. If you can put yourself in the shoes of the business owner, you may be able to understand and calculate numbers much better. Now, for me, this is a taxi business that most of us probably know how it works. You can picture a taxi business, whether it's Uber, whether it is a normal, your normal taxis, or whether it is these school taxis. It's very easy to sit back and picture everything that is happening, because you can visualize what they are doing. So by being able to visualize what they are doing, you should be able to visualize to a large extent, if not 100%, all the revenue that they're making, that they made mention over here, as well as all the costs incurred. And that should actually help you to identify, that should actually help you to, how can I say, to answer this question. So when something's confusing, try to put yourself in the shoes of the business owner. You try to be that business owner and understand what is happening. Perhaps related to a business you may understand, but I think this is one business that we all can understand, whether we operate a business like this or not, because we can kind of picture what is actually happening, because we see it every single day of our lives. So it may seem confusing, but try to just visualize this scenario with a real life taxi and see how the costs and so forth make sense. The only thing that you need to identify as a management accountant, so identify which of these costs are fixed, which of these costs are variable, and potentially which of these costs are a mixed cost. Okay, so remember, from a management accounting perspective, you must keep your head up straight when it comes to costs. We know it's total cost, but total cost is fixed and variable. So some cost is purely fixed, some cost is purely variable, and some costs are mixed. And then you have to split out what is fixed, what is variable. Nothing stood out to me that we need to split out. Remember, when they give you a range of information, they give you a range of costs and a range of activity. So for example, let's say, I'm going to make up something now for electricity. They will tell you in the month of November, the cost of electricity, your water bill, your municipal bill that you got was 10,000 Rand. And in November, you used so much kilowatts of electricity. In December, it was 11,000 Rand, and you used so much kilowatts of electricity. In December, it was whatever cost was so much kilowatts. So when you see that pattern, for a particular cost, they're giving you two sets of information, a string of costs and a string of activity. That must indicate to you, that must be a trigger that you have a mixed cost, and you have to split the mixed cost between fixed and variable. And the way you will do that is using the high-low method. So just be aware of that. The high-low method, basically, if I can put it this way, obviously I can't put it this way, but just to emphasize how often it comes in, I would say it comes in always. In a psych exam, it's probably 100% of the time tested, the high-low method. Like, it's not obviously 100%, but I'm talking about how often it comes in. It's as if it comes in 100% of the time. So just be aware of that. It may not come now. It may come in test 4, it may not come in test 4, but it may come in the final exam. So just be aware of the high-low method. Okay, so just take note of that. Okay, so let's move on. So I want to deal with this with A1, at least A1 and hopefully A2. I'm not going to worry with A3, and then tomorrow we will deal with part B. I'm not going to do part C. Tomorrow we'll try to do part B. But today I want to try definitely A1, and we're going to try to do A2. So let's read it. So they say, part A1, calculate the rate that Madonna should quote per school kid per month to achieve the budgeted annual target profit before tax. Now remember, they want to know the price per child. So the price per child, how much must we, what is the amount we need to make in order to generate a target profit? It is the same thing that they're asking you, break-even revenue. Now remember, we have break-even profit, but you can also have break-even revenue. Okay, so break-even revenue will tell you the total revenue you need to generate in order to break even. So you have two CVP type formulas, break-even units, and sorry, you have two break-even formulas under CVP, break-even units and break-even revenue. Break-even units tells you how many units you need to sell in order to break even. Break-even revenue tells you how much revenue you need to make in order to break even. Now that units is total units, the revenue is total revenue. They didn't ask us for total revenue. They asked us for revenue per child. But we know if we get break-even revenue, total revenue, we take that number and we divide it by the number of children, which is 66, if I remember correctly. So then we say total revenue divided by child, divided by number of children or kids, and that will give us the revenue per child. So just take note of that. Now the question would be, how do we get break-even revenue? Break-even revenue is, I'll share it now with you. Let me just open up Excel. So it's important to understand the question. They ask you, calculate the rate that Madonna should quote per school kid per month to achieve the budgeted annual target profit before tax. Okay, so the first thing, calculate the rate. The rate just means the selling price. Okay, we can't call it a selling price, we're doing a service. Okay, so it's basically the selling price per unit. The selling price referring to the rate, the unit referring to the child. Okay, so try to use generic terms. Try to use the actual terminology they use. Remember, this is CTA. This is CTA. They're going to use actual terminology. But just to help you, to guide yourself, take that actual terminology and try to convert it into some generic formula, okay, that you know. Obviously, in the real world, you need to obviously then, once you know the generic formula, when you re-put it out to people, you must give it in the context of their business. So they're asking you, calculate the rate per school kid. What's irrelevant information is this, that Madonna should quote. We don't need to know that. We just want to know the rate per school kid. That makes more sense now. Calculate the rate per school kid. In other words, calculate the selling price per unit. Selling price being the rate, per school kid being per unit. So just be aware of that, okay? But they don't want it on an annual basis. They want it on a per month to achieve the target profit before tax. Now, the formula we dealt with was break even. This formula is not break even. This formula is target profit. But I'll show you, you just add target profit to the formula and then we get to the answer. Okay, so just see, it sounds more complicated when you read it like this. Calculate the rate that Madonna should quote per school kid. But if you ignore that highlighted part and you just read calculate the rate per school kid, makes so much more easier. And it makes it even more easier when you read it, calculate the selling price per unit. The selling price being the rate per school kid being the unit. Okay, so so just be aware of that. Then just take note, when we get to the final answer, we must make sure that it is per school kid per month and not per annum. Okay, so let's get into it. So let me just quickly share this formula. I'm just going to share quickly. So I'm going to open up Google Docs. Okay, so I will add you guys to the folder, and then you'll access the Google Sheet immediately if you have a Gmail account. If you don't have a Gmail account, you will get an email to say you need to request access. You will click that button, Google will send me the email, then I will then just share it with you again. That's how Google works. Google give you immediate access if you have a Gmail account, but if you don't have a Gmail account, they have another two-step process. Okay, so let's have a look. Let me just share my screen with you quickly. So remember, for all the registered students, you already have access to the normal Google folders for the normal course. I created another folder now for the test prep. So all of you who's part of the test prep will have access to it. I'll do it at the end of this lesson. Okay. So just as a quick thing, break even units equals fixed costs divided by contribution margin per unit. Okay. Then if you want break-even revenue, it will be fixed costs divided by contribution margin ratio. Okay. Now, contribution margin ratio, just so you know, contribution margin ratio equals, tell me what does it equal? I'm trying to think now. Contribution margin per unit divided by revenue per unit. Okay, so that is basically contribution margin ratio. Now they didn't want break even. They wanted what did they want? They wanted target profit. Okay. So target profit is basically the same thing, just that we will make a slight adjustment. target profit units will be fixed costs plus target profit. Break even, target profit revenue, same thing. Just make a slight adjustment. Target profit revenue equals fixed costs plus target profit. You should know this because, I mean, we did this second year, MAC4662. You did this in 370, I mean, MAC2601, MAC3701. Okay, so you definitely should know this. Nothing new. Shouldn't be alarm bells. It is normal stuff. Okay, so now we need to use this in order to calculate what they want. So what does he want? They want us to calculate the price per kid per month. Okay, so what you can do, you get total, you will get basically this figure divided by the number of school kids. So just be aware of that. What we're going to do, we're going to get what's the revenue we need to make for the entire year. Okay, what is the cost we need? The cost, what is the fixed cost plus the target profit that we need to make for the entire year. But we don't want it on a yearly basis. We want it on a monthly basis. Then we just divide by the number of months. Now remember, they want to know in order to generate the target profit. So let's ignore the target profit for now. Okay, we will just add that at the end. Let's think of it in terms of break even. So it makes more sense. What is the break even revenue for the entire year? So what is the break even revenue that we need to generate for the entire year? Okay, so what is the revenue we need to generate for the entire year in order to break even? But we need to know, in order to get that break-even revenue, how much we need to charge each child per month. So ultimately, what we're going to do, once we get that break-even revenue, once we get the break-even revenue number, all we need to do is divide it by the number of children. Okay, so just be aware of that. So I'm not going to do this here. Those are just separate formulas. So let's have a look what we need to actually do. So the question said, dear student, please calculate revenue per child per month. Okay, so we need to calculate that. Revenue per child per month to achieve target profit. So what we can do is the following. We can simply try to get revenue, that we're going to get break even, or we're going to get target profit revenue. So what we're going to work out, so in order to get the answer, we're going to work out target and then we'll just say divide by number of school, what do they call it, kids. And that will give us this will give us, what will this give us now? This will give us revenue kid, okay. So that is basically what we need to get. To obtain revenue, to achieve target profit, revenue, and then from there, we will divide by the number of school kids. We know the number of school kids. The number of school kids is 66. We can already plug that and get our half a mark. Okay, so we can at least get our half a mark early on. So let's work it out. What I'm trying to do over here. Okay, I just want to show you one more thing quickly. Another thing to understand is the following. Okay, I just want to show you another thing to understand is the following. When you're looking at break even, right? So I'm going to explain it from a break even point of view, but it will also imply when it comes to a target profit point of view. Remember the difference between break even and target profit. Break even, the profit is zero. With a target profit, the profit is not zero, it is some number. Okay, so if you have a target profit of R1 million, then it's basically your profit is R1 million. When we talk about break even, basically break even, the profit figure is zero. So let's have a look if we break up this formula as well. Okay, so remember break even means profit is zero. So what you should know is you'll have profit equals sales minus total cost. Okay, remember how else can you change that? Profit equals sales minus variable costs minus fixed costs. Then how else can you change that? How else can you change that is as follows. Profit equals selling price per unit multiplied by units minus variable costs per unit times units minus fixed costs. Okay, so just be aware of that. Now, with the break-even formula as we see it above, another way to have the break-even formula is basically profit is zero, right? So profit is zero. So you're having sales equals variable costs plus fixed costs. Okay, so just be aware of that. That ultimately, if you rearrange this whole equation, you're going to have sales. So over here, just have a look at this formula over here. If you keep sales on this side and you move variable costs and fixed costs to the other side, it becomes fixed costs plus variable costs equals sales. So I just change it around. So just be aware of that. Now, we can do the same thing over here. If you work out, if you know what your target profit is, if you know what the target profit is, and you identify all your costs. So for example, profit equals sales minus variable costs minus fixed costs. They are saying, they are asking us, what sales figure must we achieve in order that we cover this variable cost, that fixed cost, to ultimately get to our profit figure. So in other words, they are saying the target profit, we know what is the target profit. So to get to sales, sales equals profit plus variable costs plus fixed costs. Okay, so just be aware of that. So you need to have a look how you want to set up the question. Okay, the way we know what target profit is at 513 Rand that they gave us. We can work out the variable cost, we can work out the fixed cost. Basically, we can work out total costs. Okay, we don't need to split out between variable and fixed. It may be useful to know, but they gave us all the costs incurred. So we can basically plug in our profit figure, plug in our variable cost figure, and plug in our fixed cost figure. We're not going to split it out. We will state exactly each line item. By plugging in profit, by identifying all our variable, and by identifying all our fixed costs, we'll go in chronological order. We will be able to get the sales figure for the year. We know the annual target profit, so we must get an annual variable cost, and we must get an annual fixed cost. That will give us the annual sales figure we need to achieve. Now, they're not asking us for an annual sales figure. They want a figure per child. So then we need to divide it per child. They don't want us to divide an annual figure per child. They want on a monthly basis. We'll have to do another adjustment. But basically, that is what's important to understand. What is management accounting all about? It's all about managing profits. Okay, so how do you get profits? Sales minus variable cost minus fixed cost. Given the information, we are using this approach over here. We're going to use that approach over there. Okay. So if I'm going to come over here, I'll put in what I know. I have target profit. Target profit is target profit was given to me as, I cannot remember, 513,000. Just check that I have the right number down. Okay. I just want to see my target profit quickly. Okay, so they say the budgeted annual profit before tax target is 513,000 for the overall business. Okay, the market is very competitive. Okay, drivers are adequately trained. Okay, so that's my target profit. Okay, so that's fine. Madonna 66 kids in total. Okay, so I'm happy with that. Okay, so that's my target profit. So now let's identify the various costs. So now let's identify the various costs. Okay. So I'm going to work out the various costs. So let's work out the various costs. So the first cost we will identify, we already identified. So just keep note, operate for 10 months, 20 school days per month. So let's move on to the costing. Okay, we got 513. Okay, we don't want anything over here. So let's start over here. Madonna has identified three drivers. Okay, so let's deal with the various drivers. So I'm going to go and I'm going to plug in drivers. So these are now all the costs. So I'm going to say so we go drivers per annum. So remember, the drivers are 3 drivers multiplied by 8,000 Rand per month multiplied by 12 months. Okay, are we happy with that? Okay, so I do that as well. Okay, so just take note, whatever answer we get over here represents, whatever answer we're going to get over here represents the following, represents this over here. Okay, so whatever answer we're going to get is target profit plus variable cost plus fixed cost, target profit plus total cost. That is equal to the sales. That's also equal to the sales, and that's what we are trying to achieve. Okay, so just be aware of that. So now we have drivers. Let's have a look at the other costs as well. So let's have a look. So we have Madonna has identified 3 female each. Driver has assigned a 12-month contract. The drivers will each be allocated 2 groups. Okay. The kids are all provided with an afternoon snack consisting of one. Okay, so it's 5 Rand per 5 Rand per snack per kid per day. Okay, so each snack is 5 Rand per day. How many days in a month? There are 20 days in a month, 20 school days. Remember, they're not going to give them on weekends. We're not picking them up. So it's 5 Rand per day, right? and there are 20 days per month. I'm working an annual figure. So I must to get an annual figure, I need to multiply by the number of months. There are only 10 driving months, okay? And we want it for total, so we can multiply by the number of school children. Okay, so that is that cost over there. Okay, so just stop me whenever you get, whenever you are confused, okay? Next, the policy, okay, nothing over the policy we need. I don't remember seeing any numbers over there. Now we can deal with fuel costs. Okay, now we're going to deal with fuel costs. So the fuel cost is going to be as follows. So fuel costs, this is forecast vehicle operating cost in year one. Okay, so average annual distance to be traveled per vehicle. Average annual distance to be traveled per vehicle, and the average liters of diesel to be for every 100 kilometers, and then the cost per diesel. Okay, so remember, the fuel cost over here is going to be as follows. There are 3 vehicles, right? Each vehicle travels 60,000 kilometers, but the price they're giving us is a price, what did they give us? Yeah, so then they're giving us how many kilometers, so we know there's 60,000 kilometers, but they're telling us that the vehicle uses 10 liters for every 100 kilometers. So for us to work out how many 10 liters, we're going to say as follows: 60,000 kilometers divided by 100 kilometers. 60,000 kilometers divided by 100 kilometers will tell us how many 10 liters we will need. Okay, then we can multiply that by 10 liters and then multiply that by the price per liter, 12 Rand 50. If you want me to do it separately, I'll do the calculation separately. So maybe I'll just do this one over here quickly, so it makes more intuitive sense. So this is the fuel cost. Annual kilometers per vehicle. So annual kilometers per vehicle, 60,000. Okay, they're telling us that the vehicle uses 10 liters for every 100 kilometers. So to us, so we need to know how many 100 kilometers are there. Okay. So now we're going to say, so now we're going to put here 100 kilometers. So this will give us the number of 100 kilometers. Number of 100 kilometers per vehicle. So we know that is each vehicle travels 60,000 kilometers. They told us each vehicle uses 10 liters for every 100 kilometers. So we need to know how many 100 kilometers are there. So we're saying 60,000 divided by 100 kilometers, and that tells us that each vehicle travels 600 100 kilometers. Okay. So all this is telling us how many 100 kilometers do they travel, and they travel, each vehicle travels 600 100 kilometers. Now we can say liters per 100 kilometer. They told us that is 10. Now, if we multiply that, that will give us the number of liters each vehicle uses. But we're going to say number of vehicles, or we'll say costs per liter. which is, I think, if I remember now, 12.50. And so now if we say one vehicle travels 100 kilometers, each 100 kilometers uses 10 liters, each liter is 12.50. That will give you the total fuel costs per annum for one vehicle, but we want for all three vehicles. Okay, so therefore we're going to say number of vehicles, which is 3, and this will give us total fuel costs per annum for all three vehicles. Total fuel costs per annum for all three vehicles, okay, or taxis. So it's going to be 600 multiplied by 10 liters multiplied by 12.50 per liter multiplied by 3 vehicles. And that gives me 225. So what I want you to understand, this question is difficult if you're going to think of it, purely from an academic point of view. If you're going to think of it purely from an academic, a student point of view. So while I'm telling you this, I was a student as well. So I know how I thought. When I was a student, I thought my mindset was like a student. We just think from an academic point of view. But the advantage you have over what I had is that most of you, if not all of you, are working in the real world. So the advantage you have is that you have that real world experience, whether it is directly related to accounting as irrespective, but you have that real world experience. Obviously, if you're working in the finance department, even better. But having that real world experience helps your mindset shift from being a pure student to actually thinking to the real world. So if you're going to think how I used to think, like a student, this is difficult because you wouldn't kind of make sense. You're trying to you're hoping for your memory on past question papers to help you out. But what's actually going to help you out is to think in real terms, to think in terms of the real world. So if I'm telling you, if you are able to visualize this scenario in the real world, it basically takes you out of the mindset of a student, and you now see yourself as a consultant to this taxi business, and then trying to help them from a consultant point of view, from a professional point of view, being a professional as opposed to being a student, a professional point of view in analyzing their business and providing them with suggestions or with an answer, you will do much better. But if you think like a student, how does a student think? We just think in terms of the books or what the books had to say, in terms of what the textbook said, what our notes said, and we're not trying to use that principles and apply it over here. Then you're going to struggle a bit. But and that is what I used to struggle in management accounting, because I just used to think about from a academic, technical point of view. What you're doing in the real world, you're applying those technicalities, but you're doing it in a more practical manner. So if you can think practically, if you can think how this business is operating, just many of you probably, if you traveled taxi, so if you can picture yourself traveling in a taxi and know what they encounter, how they make their money and all of those type of stuff, think about how, if that taxi driver had to approach you and ask him to assist you, ask you to assist him, then how do you deal with it? You wouldn't go about it on a very academic point of view. You're applying the principles of academic, but you are using it in a more practical, real world way. So try to, when it comes to cost accounting, try to get into that level of thinking, shift yourself. And like I said, it's going to be easy for most of you because most of you are not purely students. You're not just a student, you're also working. So that, use that as an advantage. Ignore the other disadvantages of time. Think of the other advantages. It's a great advantage that you actually have. So this can be a challenging question, but if you can think of it from a practical, real-world point of view, using the principles of academia, then you would find this question quite okay. Okay, so just remember that. So why I'm telling you this is this question, this calculation might seem daunting, but if you can think of it logically, it should make sense. And more so, it's not really a management accounting question. This is more mathematics. Okay, so just try to understand that from a maths point of view as well. Okay, so we dealt with fuel costs. Now we're going to deal with tires. Then we'll deal with insurance. So the tires is cost of replacing all 4 tires per vehicle. Okay, so all 4 tires per vehicle. Okay, so now remember tires. Maybe I'll just do a calculation here as well. Working 3. Okay, so we're going to say all 4 tires per vehicle. Okay. Cost of 4 tires per vehicle per 30,000 kilometers. So the cost per vehicle per 30,000 kilometers, 7,500. The number of 30,000 kilometers, so number of 30,000 kilometers per vehicle, how am I spelling now, is 2. Because remember, each vehicle travels 60,000 kilometers. Okay, and the number of vehicles. And that is 3. So this is tire costs. Okay. Remember in the exam, you don't have to go in so much detail in terms of the way I'm wording it. You can obviously write in one line. Okay, but this is obviously you're going to use this afterwards. So that is why I'm giving a little bit more detail. So I don't want to get to total tire costs all vehicles. So what is that? Equal 7,500 times 2 times 3. Okay, so what does that give us? 45,000. Okay. Now the next one, what's the next one? What is the next one? Insurance, average annual insurance premium, average annual per vehicle. So that's easy, okay? Insurance. So this is insurance. So this is going to be 24,000 times 3. Okay, the next one is, gonna remember, servicing. So estimated that the cost of servicing each vehicle in the first year of operation would amount to 7,500 Rand. I mean, 5,700 Rand per vehicle on the assumption that each vehicle needs to be serviced after every 20,000 kilometers. Okay, so if I do another calculation, I'm sure you're getting the gist of it now. Working for cost per service per vehicle per 20,000 kilometers. It is 5,700. Number of 20,000 kilometers. How much is there? Equal to each vehicle is 60,000. 1, 2, 3 divided by 20. 1, 2, 3. So it is 3 and the number of vehicles. Okay, so total service costs. Total service costs. So the total service costs is C43. Equals C43. The nice of CVP, for those of you who would want to start your own business, you basically need to just apply CVP principles to work out the profitability side of your business. In a startups, and I'm talking about not just from an academic point of view. If you a startup and you want to obtain funding, they want to know your break even. Basically, they want to know your what do they call it now? They want your contribution margin. They just use a different terminology, but they want to know contribution margin per unit. What they want to know, how much money you generate per sale after taking off variable costs. And then they want to know how many sales do you need, how much units of sales do you need to make in order to cover your fixed costs. And then the other thing, which we don't need to know, but basically I want to know, what is the cost to acquire a customer? So they indirectly, in a very simple way, they apply CVP principles. So if you can, when you use CVP, because it's very big in management accounting, try to think of you running your business and but using the actual scenario. And that is basically how you'd be able to navigate a scenario like this that you may perhaps that is unknown to you or unseen to you. So service costs. What's the next one? Okay, so that is car wash, if I can put it that way. So I can probably put a car wash. Car wash. Okay, I'm gonna call it teenagers. So car wash teenagers would be what? What is car wash teenagers? So Madonna entered an agreement with 2 high school teenagers to wash the vehicles upon returning at a monthly 2,000 Rand per month, per teenager. The arrangement is only applicable during the school days, and the 2 teenagers are willing to each do a maximum of 2 vehicles at the agreed fee. Vehicle cleaning materials, water, electricity of the 3 vehicles is budgeted at 9,900 Rand per month. Okay, so there's 2 teenagers at 2,000 Rand per month, but they only do it during school days. So there's the number of months that the school is running is 10 months. Okay, and then car wash materials, and water and so forth. So it's now equal to 900 Rand per month, but you're only going to incur it for 10 months. Okay, so you're okay with that. So just be aware of that. And then what do we have next is the last paragraph. I think it's the last paragraph. Yeah, it is the admin, which is to provide for 10 months of it. So it's 3750 or admin. What was it? 3570 times 10 months. Okay, now remember in management accounting, in financial management, we are focused on cash flow. In financial management, we are focused on cash flow. Okay, so from a financial management point of view, we are focused on cash flow. From a management accounting point of view, we're not interested in necessarily just cash flow. We want all costs because we're working out profit. Remember, we're working out profit. So profit is sales minus variable cost minus fixed cost. profit is all costs. So there's also depreciation. Depreciation. Remember, he bought 3 vehicles at, what was it now? He bought 3 vehicles at 690, each costing 690, with the expected useful life of 3,000 kilometers. Okay, 300,000 kilometers. So basically, depreciation we can work out using the units of production model. So working 5. So remember, cost per vehicle, cost per vehicle 690. 1, 2, 3. Residual value. There was no residual value, so that gives me a depreciable amount. So remember, just so you know, one thing, like one of the reasons SAICA brought in strategy, risk management, and governance is one, and that is why they remove some topics also from the syllabus, especially from accounting, because they want to produce, they want an entry-level CA to be a general accountant, but on obviously a CA level, right? So, that's why you don't do specific topics like insurance, mining, oil and gas. That you as a CA must, or as a professional, must learn on your own once you hit the real world. But they want to produce, they want an accountant to have a general understanding of what is the role of an accountant, and not just to be an accountant, but they want you to actually play an active role in decision-making of the business. And that is why they want us to learn strategy, risk management, and governance, because strategy, risk management, and governance plays a critical role in helping companies make decisions, helping management CEOs make the necessary decisions. So that is one from a CA, right? As a result of that, they also, in order for a CA to also be able to do that, they must not think in silos. So SAICA knew for a long time, and that's why a lot of universities are required to change, and they are changing, is to move away from the silo approach. They still want you to have the various disciplines, the discipline of accounting, the discipline of auditing, the discipline of tax, the discipline of management, accounting, and finance. They still want those disciplines, but they require a CA in order to be of true value to the business world, true value to companies, to be able to break the silo mentality and think across disciplines, right? The impact of everything. And I've seen it in the real world. Like when the financial director come to you, they want to, let's say there's a PP asset they want to achieve. The question is, should we get it now? Should we get it then? What is the accounting treatment? How's it look on our balance sheet? Is there any legal requirements that it has to be that way, or can we do it another way? What are the tax implication? If the tax implication is, if we do it like this, what is the tax implication? If we do it like that, what is the tax implication? If we do it like this, what is the auditors going to say? I mean, a lot of companies just worry about the auditors. What is the auditors going to say? Can we justify our point? And all of those. So in the real world, the FD comes to you and he asks that question, one question after the other. Tax implication from an auditor perspective, is it going to be okay? And how's it going to look on our books? So if you like, and then obviously we operate, the companies I worked for operate in a highly regulated environment. So you also want to have a look from a regulation point of view. Now, because of that, SAICA wants universities to break that silo method. So as you can see here, this is management accounting, but what are they bringing through over here? Subtly, but what are they bringing through? They're bringing through accounting. So just be aware of it. Don't think it's what you call, you must apply rules of accounting. You'll have to apply rules of accounting. And that is why I'm specifically doing the calculation as I would do it when I do it in accounting. So you can see that link. So don't underestimate it. It is something very serious on cycling. If you just go Google cycle CA 2025, I think it's called, or CA 2030, something like that. CA, the future CA of 2025, something like that is called, and you can read what cycle's up to. So, for example, a lot of the things that I have done as a student is different with what I think you guys are now. Maybe you're going to miss it, but they're changing of what they are actually, what they basically going to be testing, how they're going to be testing, and so forth. So, so just be aware of it. Don't make it be scared of it, but just remember, it is ultimately for you to achieve, to think like they want you to. It's basically for you to meet the objective of what Psych is trying to achieve, and that is to make sure you can be of true value, not just a number cruncher. Number crunching is critical for a CA. That's why most people want us. But Psych want us to be more than that, and the business will need us to be more than that. And that is why you'll see in a lot of job stuff, they're looking for a finance business partner, because many times finance is a support function, but you want to sell yourself as a business partner. Very, very important. A lot of CFOs nowadays, they look for that. So that is why I'm doing this calculation in this manner. I mean, I could have done it much quicker, but I'm doing it how I would calculate it in accounting, solely to show you that integration, okay? And don't find it as a burden. See it as you being developed into that well-rounded CA, that when you step in, management and so forth want you to be part of their meetings in order for, because they know you're going to add value to them. So don't see it as a burden. Okay, so that is our depreciable amount. Now using the units of production, what do we do? With the units of production, you take depreciable amount multiplied by units used in the current year, divided by total estimated units. Okay, so units in current year. And this is total estimated units. So total estimated units, 300 kilometers, 300,000 for the year, it is 60. So you can see it's basically a 5-year period. So this will give you annual depreciation per vehicle. Annual depreciation per vehicle. So it's going to be 690 multiplied by 60 divided by 300. And we wanted, so we're going to say number of vehicles. 3 total depreciation. Okay, for all 3 vehicles, it's going to be the sum of that. So this is C52. So if I go up, I should have all the costs now. So here we're going to go C52 equals C52. Okay, so I think I have all the costs. Okay, so that's my total cost. That's my total cost plus target profit for the year, which ultimately is revenue. Okay, but now remember, I don't want an annual revenue figure. I want a monthly revenue figure. So I just say number of months per year, that is 10. So revenue per month. So this will give me revenue per month. Revenue per month. Okay, now I can divide that by the number of children. So this is C27. So I go over here, working one. So this was C27, I think, yeah. C27, delete. This year, 66 children given. So I'll just say that divided by that. So we divide by the number of children. So that would basically give us our, what you call it. Let me just see if I added up everything correctly. Okay. So there you can see revenue per child. So what is the revenue per child? 265.15 Rand, but they asked us to round it up to the nearest 10 Rand. I'm not sure what does that mean. Okay, but I guess the nearest 10 Rand. So therefore, revenue per kid per month, what do they call it per kid? Per, I don't know what it's called, okay, is going to be, so to the nearest 10 Rand is 2670. You guys have any questions? Let's start from the bottom. I'll see what's at the bottom now. So that's my answer. What's important to take note? What's important to take note is the following. That is why it is that is why it's important that you know the various ways you can do something. Okay, so before you enter the exam, you must know the various ways you can do something. So remember, break even would be that formula I showed you, but it's also like we can say sales. Break even is profit equals sales minus variable cost minus fixed cost. So you must look what information is given and which information would best, which formula would best obtain the answer that you are looking for. What was critical in this question is that there's different ways to get to the same answer. I always generally just prefer an annual calculation. Because kind of with an annual calculation, in most cases, you can always get an annual calculation and then convert it to what you need it. Okay, so you must have a look how you want it. I always generally prefer to use a total annual number. Sometimes it can't work, but in most cases, it does work. We take a total annual number. So I get a total annual number. That is my total annual number. This 1,759,000 is my total annual number. Why? It generally helps me because it generally keeps my mind anchored, and I'm working on a total annual number. So when I read information, I'm always working on a total annual number. So it's easy for me to keep track and not to forget to make the some other conversion. So my conversion is always to a total annual number. Once I get to the total annual number, I then convert it to what they wanted. So then we convert it to a monthly figure, which is that. You could have, from the beginning, from this point onwards, you could, for each line item, you could have already worked out on a monthly number. to get to the 175,900. Okay, so there's different ways. Because you can see sometimes they give you on an annual, then they give you per month, then they give you for 10 months, then they give you so for me, I work on an annual, easy to base it that way. So my thinking is always the same. When I read something, let's convert it to an annual figure. Read something, convert it to an annual figure. And then I'm like, okay, but they don't want an annual number. They want a monthly number. So divide by the number of months. So remember, not divided by 12, divided by 10. If I divide it by 12, I won't achieve the target profit because I'm going to charge the customers less. So just see here, if I do that, if I divide it by 12, you can see the price becomes 2,200 Rand. Now, if I charge him 2,200 Rand, I won't achieve the target profit because for 2 months of the year, I'm not going to get paid. So I need to know, in order to, if I only get paid 10 times in the month, 10 months in the year, how much do I need to charge? Okay, that's the same thing. Like, for example, the way CA Campus, the way everyone, when they price their courses, they're going to say, okay, CTA or even the universities, they know they're only in operation. They really own an operation for 6 months of the year. Okay, so, or 8 months at most for the year in terms of when they're providing the courses, maximum 8 months in the year. Like if I remember being at UCT, I used to count how many days I was on holiday. Basically, like for 6 months of the year, you're at home. Other 6 months you're there. You understand, but they charge you on an annual basis because they don't just incur costs for 6 months. They incur costs for the entire year. So the way they price, they will make sure that they generate enough revenue in order to cover their costs for the year as well as generate a profit. So that is a similar thing over here. So when they price their thing, they're going to get an annual cost for their target profit. They're like, okay, I need to generate that amount of money in order to cover all my costs as well as generate the profit I need. But I don't operate for 12 months. Operate for 10 months. So how many? What you call it? Alternatively, in most cases, they're not going to divide by the number of months. They'll just basically divide by the average course price to determine how many students that they need. Or they will say, okay, we can only take 100 students. So if you can only take 100 students, that means your capacity is limited to 100. You need that revenue. So when you divide by 100, you need to charge per student 17,590 Rand in order to get your thing. So you see things like that that work out to a large extent. That is how a company would work out when they focus on a cost structure. Obviously, Apple doesn't price their products like that. Apple sits back and think, what is my product worth to a customer? What is its value to the customer? So they follow a different approach. So they don't care about their costs because ultimately the price they're charging is generating profits like in multiples. So yeah, that's what I wanted to cover for today. Tomorrow we'll move on to part B. We'll quickly touch on part 2, like not today, tomorrow. But before we move on, is there any questions that you guys have? I'm going to come there now, MAC4863 2020. Okay. Let's just see. There's lots of who's sending questions. Okay. Okay, so no questions. Okay, before we end, Andile, Ashita, Bernice. Okay, let's start from the bottom. Felice, Ryan, and Rebecca. Any questions? Anything confusing on your side?
I don't have any questions.
Anything confusing your side, Ryan?
No, not really. Just switching the numbers up, where you did the whole going from total profit to sales, changing the signs, because this made me a
Okay.
bit confused.
Okay. So let me
The
quickly do
target
that.
profit. Yeah,
So this, you're talking about this over here.
yeah, that yes.
Okay. So remember, profit. So when I'm saying profit, let me just change the wording to target profit. Okay. Target profit equals sales minus, okay, let me put it this way. Sales minus variable costs minus fixed costs equals target profit. Okay. So if I rearrange this equation, if I want sales, because I don't know sales, so sales is my unknown. Sales is X. X is the unknown. So it's equal to target profit. Target profit. And now I'm moving variable cost to the other side of the equation. So because it was negative, it now becomes positive, and I'm moving fixed cost to the other side of the equation. So because it's negative, it becomes positive. Does that make sense now?
Yes,
Okay, so you see what
actually,
we're doing over there. So
yeah.
so we want sales. I know my target profit. I know my variable costs. I know my fixed costs. My target profit in this question was given as 513. Okay, 513. If I just quickly do something really quickly. I'm just going to do Excel formula quickly, or whatever formula. If I'm just, so that is target profit. To a large extent, everything is a fixed cost. I'm just going to make everything a fixed cost besides the snack. The snack is a variable cost. So to a large extent, let's just make everything a fixed cost. So my target profit, if I just say equals sum if my target profit, sum if what? So my target profit is, oh, come on, let's just say this. So if I add up all of these, so remember, my sales is target profit plus variable costs plus fixed costs. So that will give me my annual figure of what I'm looking for. So in order for me to generate, in order for me to make that target profit of 513,000 plus cover all my costs, I need to generate a sales figure of 1.7 million rand. Does that answer your question?
Yes, yes, it does.
Valise, any questions from your side? Let me just see what the chat have to say. Valise, oh wait, here's a message here. Nothing confusing your side, Valise? No? Yes? Okay, you wanted to talk?
No, no questions, nothing confusing from my side either.
Rebecca? Anything confusing your side? Rebecca? Larato? Okay, I don't see Larato here now. Nasreen?
No, all good.
Okay. Fakir?
No questions, nothing confusing for now.
So, Faid?
You're asking the wrong person.
What?
work through it. I know I always have a problem with costing. My worst subject took me three semesters to pass advanced diploma management accounting, especially this section. So
we don't
for
work
me, I
through
think,
it.
yeah, so I must work through it now, and then I'll have questions later.
Okay.
So
But when you read the required, did you know what was happening? Would you know what to have done?
no, you see, that's the problem. But now I might just sit and think and see what I'm gonna do.
Okay. So you must
Just
better make sure. But
let it sink in.
CVP is definitely coming in, eh? So CVP is definitely coming in. How in the test
And
is obviously, I don't know. I asked Fakir already. Emily?
No question.
Okay, anything confusing?
Nothing. Nothing.
Okay, so I think Bernice, did you have anything confusing? Ashita, I'm not sure if you said no to nothing confusing. Bernice, Ashita, and Dile?
Nothing
No,
confusing.
nothing on my side.
So you can just quickly in the chat. So whatever you're going to respond to now, whichever message I see now, you can just tell me in the chat. So whatever I'm going to see now coming into the chat, it's a response to the question I'm going to ask now. Reading the required, did you know what to do? And if so, whatever you thought you needed to do, was it what we actually did? So number one, there's two responses. One, did you know what to do? So if the answer is yes, you knew what to do when you read the required, or when I say know what to do, you had an idea in your mind. And then number two, whatever idea you had in your mind, if you had something in your mind, was it the right thing? So basically you're just going to say one, yes or no, two, yes or no. Remember, if number one is no, then obviously number two has to be no. But if number one is yes, then I want to know what is number two. So number one, did you have any idea what the required was? That's number one. Number two, if for those that did have an idea of what the required was it the right idea? Did you have the right thinking? So just quickly, and then we're going to call it a night. So you can just put it in the chat quick, or you can tell me. Okay, so a lot of you left out depreciation for those of you who got it. Minor, no need to get 100% for that question, but at least you're on the right track. Okay, so great stuff. Okay. Okay. So thanks for the feedback. We'll see you tomorrow, and then we will cover the rest of the thing. But just before you go, I just quickly want to add you to the group, as I'm going to forget. Where is this now? Okay, so it is edu MAC4862. And delay, that's you, right? And delay, and then
Yes, that's me.
Emily, this is you. Okay, that should be Emily. Okay, so you're all in it. Okay, so there we go. So you should have access to Mac. There we go. Okay, all good, guys. I'll see you guys tomorrow, 6:30, same time. I'll send out the link tomorrow again. Okay, bye-bye.